Can you just give us an indication of what's playing into the local currency as we see that dollar strength coming to the fore? Is that putting some pressure on our local currency this morning?
Well, I think there's a couple of factors that are obviously driving what's happening on the currencies. Number one, obviously the forefront of our news bulletins really being what's happening with regards to the debt issues in the Greek sovereign. And the problem being that we're not seeing that Eurozone sticking together in terms of the fact that they have promised some form of bailout. That has been postponed again. The regulations or the rules around that and the way that Greece needs to contain the debt are points in a lot of contention. I mean, you've seen political unrest, you've seen social instability, as well as the fact that they're not sure that the opportunities or the suggestions that are coming out of the government of Greece are going to be sufficient. They're talking about asset sellbacks. They're talking about implementing some form of rule around asset managers and banks and institutions buying back Greek debt and rolling over their Greek debt. So there's a lot of issues in the system that remain, and it's creating a lot of uncertainty. I mean, depending on the people that you listen to, the research that you listen to, some people even saying that we could go back to a drachma and back to a Portuguese escudo at some point. So a lot of uncertainty.
We saw the rand though trading at around R6.90 at one stage on Thursday, so it is stronger than that point. What is keeping it buoyed below the 7 rand level?
Well, I think at the moment the rand, obviously, a lot of the rand flows are determined by our local market. We're not seeing a lot of institutional flow right now. We haven't seen huge amounts of asset management inflows or exflows, and certainly not seeing a lot of foreign flows in the last week. So it's really been driven by importer and exporter demand. That being said, though, with the pressure on the euro back down at that 142 level, obviously rand's closer to 680, 685. So for now, we still remain range bound. We haven't really moved out of that range. We're trading 672 up to sort of 695, and suggesting just continuing to trade that range as the uncertainty prevails. So, as you get up to that sort of 695 level, looking to sell some dollars, exporters getting into the market and looking to offlay some of their dollars at more attractive levels. And then as we get close to that 670 level, you see the importers back in again. So it's just keeping it relatively range bound. I think the uncertainty really is, you've also seen the IMF downgrade in the US, but they've upgraded growth in South Africa. Interest rates outlooks remain very, very benign, and also looking to be pushed out even further than we had thought initially. And that's the FOMC meeting this week. We've also got CPI out of South Africa, looking to see whether inflation is in fact a concern on the backdrop of the fact that our growth is continuing at a stable pace. So there's a lot of data in the system. We've got PPI out of Germany. We've got the numbers coming out of the US being the housing starts and the FOMC decision, and then obviously the South African data, which is key to our local economy.
Looking at the FOMC happening tomorrow and Wednesday, what type of clues is the market looking for from the Fed in terms of the economic growth story in the US, particularly with relation to quantitative easing?
Well, I think that there's, obviously they've got to talk about what their growth trajectory looks like, what the big risks in the system are, and how they're identifying those. It's particularly if you look at the fact that global growth as a whole has slowed down quite significantly. That plays into the hand of interest rates remaining low for a foreseeable future. Also looking to see how dovish they actually are and what they are imposing in terms of unwinding quantitative easing or continuing to keep it in place. And those are the kind of indicators. We certainly aren't expecting any form of interest rate hikes, that's for sure. It's more around this projection around lower interest rates and how long they project that to continue for.
Now, one of the other factors which has kept the local currency buoyant below the 7 rand level is foreign inflows into local bonds. Now, if we saw last week on Friday, there were net buyers in the market, 389 million on Friday, but overall institutional investors, or international investors rather, net sellers of 3.2 billion rand of bonds. Is this something that we could see continuing, a continuing trend, given the fact that we have seen strong inflows into the market and the risk aversion that is playing out? Could we see continued outflows on the bond front?
I think what you're seeing right now is that there's been a lot of uncertainty, and certainly you've seen unwinding of some of the positions that were on book. Yes, you're right. I think some form of the risk aversion has been a directional flow indicator specifically from offshore. But that being said, I think at these levels, with the sell-out that we've seen on our bond market, it's opening up opportunities again. I mean, if you look at the 186 trading above 860 again, 865, that's valuable levels again. It offers opportunity to get back into the bond market and potentially buy it. I think that what you you're going to see is that you're going to still see offshore looking for value, seeing opportunity. Once we've had FOMC behind us, once we get a little bit more clarity around the Greek crisis and there's not that much concern around riskier trades, I'd certainly think that South Africa still offers opportunity and will continue to see those inflows from offshore in the long, certainly towards the end of the year, as we can expect interest rates only to be hiked towards the beginning of next year.
What tenor are investors buying into at this stage when it comes to bonds?
Look, I think on the curve at the moment, the curve's relatively well priced. You're looking at on spreads at 186 against 157, right up at 108 again. So it has steepened up slightly, and like I said before, offering opportunity in that longer end where there is still some value at 860, 865 on the 186. And also looking in the belly of the curve. I mean, we've got the auction this week. We've got 208s on auction and 204s on auction. So it'll be interesting to see what the appetite looks like. But nonetheless, I mean, our bond curve sitting at the current levels closer to 760 and 860 offers some form of value in terms of carry trade, specifically in an offshore investor's portfolio where they're really only getting 2 to 3%.